Look, I'm gonna be real with you. This ICT hack is honestly boring. It's not flashy, it's not some crazy setup, but it's the one thing that finally made me profitable. And the funny part, most traders ignore it because they think it's too simple. But it's most likely the one thing that's holding them back from succeeding. I will show you exactly what it is in a second, but first, let me explain why ignoring this might be the biggest mistake you're making right now. When I started trading ICT, I thought the more trades I take, the faster I'd grow my account. I'd mark up every fair value gap, every sell side and buy side liquidity, every shift in market structure, and I tried to catch every single move up and down. Sounds productive, right? But here's the loop I got stuck in. The more trades I took, the more mistakes I made. The more mistakes I made, the more money I lost. The more money I lost, the more revenge trading I did. But here's the funny part though. I didn't even realize that the market was telling me not to trade this day. So the hack is real simple. Knowing when not to trade. Sounds lazy, sounds boring, but that's exactly why it works. Some days are just engineered to make you lose and wipe most of the traders out. Low probability conditions, no clear bias, no obvious run on liquidity, prices stuck in a range and chopping around. And if you can spot these conditions beforehand, I guarantee you avoid the days that most traders blow their accounts. For me, the turning point was when I finally realized that I don't need to trade every single day and don't need to trade every single setup. And I began to set out certain sessions and just sit and wait and watch the market and watch how most of the traders get wiped out. I just waited for high probability setups. That means I waited for my model, I waited for my setup to be in alignment with the daily bias and the drawn liquidity I expected the market to go to. And then one winner was enough to pay off all the time I was wasting in front of the charts and doing nothing. And here's the kicker. The less I traded, the more profitable and the more consistent I became. So how do you know when to simply stay out of the market and do nothing? I keep it real simple. First rule I have is if I cannot determine a clear bias on a daily chart, I don't trade. Let me just explain it a bit further. For example, right here, okay? You can see this daily fair value gap right here. There's a tiny gap between these candles, okay? When price is trading down here and even trades further below this daily fair value gap right here, I don't assume that we have a top in the market and then our bias is now bearish. No, we are trading an all-time high. So my bias is bullish and remains bullish until there's a real meaningful market structure shift in the market. But what do I do in these 3 days right here? Since our bias is bullish, as a beginner, I wouldn't want to participate on these days right here. Of course, you see this daily fair value gap right here and you think, okay, price traded down into it and now we go bullish. But how do you know that we continue to the upside inside of this fair value gap right here and not this one? So what am I waiting for? I'm waiting for the market to show me that this daily fair value gap is used, and then I want to see the market take it as support and continue to the upside. Now we set out this little retracement, these 3 days, where you're most likely trying to get long and get stopped out. So what do? You wait for price to be in alignment with your daily bias, which is around here, okay? Now, at this current point in time, price has proven to use this fair value gap as support and a continuation to the upside. So this is rule number 1. Wait for price to be in alignment with your daily bias. Don't trade against your daily bias. Second rule. If price is chopping around and if you clearly can see that the price action is absolutely effed up, okay? This is a sign for you to just don't trade. Trust me, you are not going to be the one that is trading at the exact point where the price action is going to be fine and when the price action is going to be tradable again, okay? You won't pick that point in time where this actually happens, okay? So if you see choppy price action, just stay out. Rule number 2. Rule number 3 is if price is in alignment with my daily bias, the price action is clean. But if I cannot determine a clear drawn liquidity to the upside if my bias is bullish, then I simply don't trade. Get that in your head. If there's no obvious high time frame bullish objective, such as a relatively equal high, a buy or a single high like a buy side liquidity, or a time-based liquidity such as London or New York high, I don't trade. These are 3 simple rules, but trust me, if you follow them, you are ahead of 99% of the traders out there that are losing their asses, okay? But here's the part most traders can't handle. Waiting for these 3 rules to come in alignment, that means you may have to sit out 1, 2 or even 3 days or even a whole week without clicking the button. And that's where most people fail. So yeah, the boring hack is just patience. And the money is clearly made by knowing when not to trade. Anyone can hit the buy or sell button, but professionals know when to do so and when to wait for it. Once you master this, you will realize that trading is not about catching every single move, but it's about catching the right move and letting the market play into your hands. And in fact, this boring hack ties into something even bigger. With more experience, you will see that these days are engineered to trap retail traders. And once you will see it like that, you will never look at the market the same way again. And that's actually something I utilized in my last video where I caught 2 winning trades. So if you want to learn more about that, I'll break it down in my last video. So I would say I catch you in the next one. Be safe.